All right, what is up, YouTube? So today I'm just gonna give you guys your first homework assignment, and this is gonna be pretty easy. We're definitely gonna follow up on Netflix. As you see, I'm still down here, but definitely things are starting to rebound, and yeah, I'm still gonna short gold. Like I said, I believe the market is gonna rally higher, and it's definitely gonna happen. So I'm still holding on to these quality positions, and as we see here, Snapchat is definitely still falling here. So um, the only way you're going to make money here is definitely shorting it or probably hoping that it bottoms right here. But definitely people are losing money since IPO, and those people that are trying to hold it are losing money because I can't see anybody actually making money here since 19 is the lowest point it's back at. Um, let's see here. Netflix will be your first assignment. Like I said, you're going to watch and see what happens for the earnings. You're going to see what the CEO says. If they see growth. I know Netflix does have some flaws in the growth model, so definitely watch out for things like that. Also, we want to pay attention to how the stock is reacting. So the stock is reacting positively today because they think that Netflix is going to beat the earnings. Now, this is typically what happens before earnings. Investors and traders will definitely signal out, what's going on here and what they think is going to happen. So we see Netflix is up 2%. So we see that they're already pricing in an earnings beat. There I would say it's like a small price in of an earnings beat. Now, if Netflix does not perform and beat earnings, this stock will get checked down. It'll probably go below 140. So we want to check out. We want to check that out. And if we want to see the stock move in real time, we just go to a 1 day chart, and that's typically when the CEO gets on the call, and the stock will start jumping around like an EKG, and that's typically how the stock will react. And I know you're wondering why would the stock jump like that? Typically because on after hours there's not a lot of traders and investors coming in, so on a small amount of volume, the stock can pop and drop quicker than a dime. So that's something to look out for when Netflix does report their earnings. Now, as we see here, we see the banks are in rally mode, and we see the banking sector, the leverage banking sector is up about 1%. And if we go to the XLF, we see it's up almost 2/3 of a percent. We see a small run up in price here, but let's see if those quality names are still at that oversold level. We see a bounce happening here. JP Morgan is definitely bouncing, but we see that it's still selling pressure here. Those support levels are still holding. So we see that the banks had a really good beat, and right now we're just waiting for buyers to come in, and that's really going to signal, is it time to go ahead and jump into these bank stocks, because this may be their leg higher. I would say Bank of America might be at $30 by the end of the year. JP Morgan might be at 100 at the end of the year. We see it try to break $90. What I say, after it goes past 90, it goes to 95. But we were oversold, so it got checked back down, and we see it broke 90, and now we're at 85. So like I said, the $5 increment does matter when you trade these stocks, and when you're looking for investments. You want to pay attention to the $5 increment or the $30 increment. So that's typically what happened here. But like I said, the banks did have a really good beat. But definitely check out Netflix earnings. Like I said, the CEO will come out, and they will talk about what they have grown last year and what they look forward towards this year. Now, if they say, okay, we missed estimates, but we still have, or they would say, okay, we missed estimates, but we still see growth in this year, the stock will typically sell off that following day. And that's typically when you will probably see me step in, okay, and buy some, because, when you have sharp reactions like that, when you have sharp reactions of people, selling stock, that typically becomes a oversold. So like I said, the RSI is just, a measure of buyers and sellers. And it's a really good measure to follow stocks on, simply because if you know where the buyers are going to come in, that's typically where you want to buy. If you know where sellers are going to come in, that's typically where you want to get out. And that's one of the best things about the RSI. It definitely lets you know where the price is going for stocks. It doesn't give you the exact price point, but it definitely does let you know, if the stock is going to go up or not. So we see the Dow Jones here. We see it definitely bounce off of support here. So we see support has been tried once and twice, and now we might break out and we might hit that top point again. But like I said, once it starts to get back up to 21,000 or close to 21,000, that's typically where we start to have trouble, and the market tends to back off, and gold and the fear index tends to run up simply because not a lot of people think that 21,000 will probably be broken simply because you have the border tax, you have healthcare, and you have the tax reform policy as well. So you have to factor in all those things, and I think that's what's going to carry us past 21,000 if we can get one of those things to happen, either healthcare, infrastructure, or the border adjustment tax. One of those things is definitely going to break us out of that 21,000 top, and we will go higher. But for right now, nothing's being done, nothing's happening. So we're at a consolidation point where everybody's waiting on earnings, and people, when we wait on earnings, that's typically when stocks are kind of like stagnant, and you will see some breakout, you will see some fall to the downside, but you won't see that in the indexes, simply because the index has I would say a broad-based investment over certain sectors. So you won't see huge drops and you won't see huge pops in the indexes, but you will see it in individual stocks if they do miss earnings or if they do beat their earnings. So that's what I want you guys to pay attention to. Remember, these earnings calls are definitely important, so that way you'll know which way the stock is going. So Netflix, definitely read up on that. Earnings is tonight. So as you see right here, 7:17 after market Central Standard Time. So whenever the market closed, that's whenever we're gonna, that's when they are going to report. And I think if you have Robinhood, put Netflix on your watch list, and you should be able to listen to the earnings call. Or if you don't have Robinhood, I'm pretty sure there's some kind of way that you can actually listen to the earnings call. But I really want you guys to get listening on your first earnings call to see how the CEOs talk about future growth, and how they never focus on short-term growth, such as like a penny stock. So we look for long-term growth. Imagine if you bought it right here at 84. Now, if you would have been watching CNBC when it dipped all the way to $84, they showed a stat showing that people who buy Netflix on a huge dip typically double their money. Now, as you see here, $84. Now we're at 148, 146 right now, and $20 higher, and you'll say, okay, you doubled your money. So that's typically what type of stats that CNBC does show. They do show the historical stats on different stocks that they trade up this day. Nine times out of 10 they're going to be down in the next 2 weeks or things like that. So the interesting thing about reading articles on CNBC, I was able to find one, and it said that when the week before tax day, stocks typically fall, and that's typically because people have to take out their money and they have to pay off their taxes. Now, what happens the following week after, or the following 2 weeks after that, is that the market, the market rallies back up, almost up 1%. I know the Nasdaq does 1%, and the S&P does about 0.5%. And the Dow Jones was now, the Dow Jones was not mentioned, but they mentioned the Russell 2000, and that definitely finishes up. So we want to check those stats out, and we see that we're starting to see pops here and there. And as you see, this is the first official 100 point day for this week. So we're going to see if that's going to set the tone, and we also want to see if the geopolitical risk will be in the back seat and we'll focus more on earnings, or will geopolitical risk definitely keep running this market? So at some point, investors and traders are going to have to say, okay, hey, we're tired of listening to this. It's never going to stop happening. Let's go ahead, get back to the fundamentals, and trade stocks and make money. Because stocks won't fall down every single day, every single week. At some point, investors and traders are going to say, okay, stocks have been hit down enough. Let's go ahead and buy. So, like I said, you could have been buying market strength, and as we see, market strength is definitely almost back up to that $65 level. As you see how that works, we get close to 60. Now we're trading right now. Now we're trading in a small range here. So definitely pay attention to the technicals. Like I said, I won't get you, I won't get you to the exact bottom, but I'll get you close to it. So we want to pay attention to the technicals. So once we break out of this $65 handle right here, this is typically where we're going to trade. The market will rally. I'm not sure how hard it will rally, but definitely we will see a rally in the market, and it may fill this gap all the way up to 67. So that implies just about a $3 up move, and if we can get to 67, we're going to make it to 70. So that's typically what you guys need to watch out for. So the Dow Jones up about over 120 points right now. So pay attention to the market. Watch out for different companies on earnings. I know, if you're looking for investments, some companies, they are reporting earnings today, and this might open up a buying opportunity for you. So we want to pay attention to that. Other than that, guys, that's all I have for you. Like I said, this is your first official homework assignment. Watch out for the Netflix earnings. Definitely join the conference call, so that way you can have somewhat of an investor type of viewpoint on the market and on a individual stock such as Netflix. We're going to see, if it has been growing or if they see stagnant growth for the year. But definitely, Netflix is definitely a stock that I do have a red flag on, simply because, when you go international and you have other competitors that that charge lower prices than Netflix, that's typically a problem. So we definitely want to watch out for that. So that's all I have for you guys. Take care.